Hey guys, it's Eric here. Yeah, it's been a while since I uploaded a video. So unfortunately, during this time I bought a condo and it took a lot of energy out of me. Unfortunately, I didn't get a chance to upload. Apparently, buying a house is a very tedious task. That being said, I'm gonna upload another video in the coming weeks on how I got my first condo during this hot market. I think it's gonna be a pretty interesting topic. So be sure to check out the video when it comes out. And during my 4-month absence, I somehow got 18 new subscribers, even though I didn't upload anything. So your support really means a lot to me. Once we reach our initial goal of having 100 subscribers, I will unveil my portfolio of stocks. Even though I don't really have much left, I sold a lot of my stocks to pay for my down payment, but hey, you know what? It's everybody's interested in what other people are investing anyways, right? So I will show you what I have left in my portfolio. That being said, let's talk about today's video, which is Robo-Investing. During these past couple weeks, I have a lot of friends ask me, "Hey Eric, what do you think about Robo-Investing? Are they good? Do they produce good returns? Give me your opinion." Who can blame them for asking? Look at this. Put your money on autopilot, or lower fees for better returns. If you're a newer investor, how can you resist the temptations? These marketing strategies are proving to be very effective. In fact, almost 8% of the Americans are using robo-investing right now. And to be honest, that number is expected to grow into the future. So why is robo-investing becoming so popular recently? Well, the answer is twofold. Ever since the stock market crashed because of the pandemic last March, the market has been going very hot recently. In fact, so hot that the S&P 500 grew by almost 2 times its value since last March. And people want some of the action. And because of that, many people want to buy into the market, but a lot of people don't know how to buy or sell shares or use these platforms or these brokerages, so they use these robo-investors to help them. Or there's people that don't really have the time to track the market every single day, so they use these robo-investors. And who can blame them? A lot of these robo-investors, their systems are pretty straightforward and easy to use. Usually you tell the system your risk tolerance, put some money in it, and voila, your money is now being invested. If that's not simplifying investing, I don't know what is. The second reason why robo-investing is becoming so popular is because of advertisements. They're making it seem like it's the best type of investment out there. People that don't really understand investing might feel like robo-investing solves all their investing problems. Just look at this graph on Questrade. A smooth curved line up. How good is that? So, how good are these robo-investors? Are they a good way to invest? What about the fees? And most importantly, do they beat the market? First of all, the fees. These companies would like you to believe that you're getting an absolute steal by investing with their robo-advisors. Look at this chart by Questrade. Questrade is showing you that if you invest in their robo-advisor, you are paying a fraction of the cost of what you would be paying if you invested in a mutual fund. Now, if you watch my previous videos on mutual funds, you'll know that I have a pretty negative opinion about mutual funds. Mutual funds not only have a very high management fee, but something like 90% of the fund managers can't even beat the market. So robo-investing having lower fees than mutual funds don't really mean anything, because mutual funds are so expensive anyways. So what these robo-investors do is that they buy ETFs on your behalf and rebalances your portfolio based on your risk tolerance. So for example, if your risk tolerance is higher, they might buy more ETFs that's a little bit more risky with less bond percentages. And if your risk tolerance is lower, they might allocate more of your portfolio to bonds. So in essence, robo-investing isn't built to beat the market, more so it's built to follow the market. So for example, if you have a very high risk tolerance, the robo-investor might invest 100% of your investments in different indexes around the world. So perhaps a combination of emerging market ETFs, ETF that tracks the S&P 500, and perhaps foreign ETF that tracks different foreign markets. That being said, if your risk tolerance is lower, perhaps 50% bonds and 50% index ETFs. So as you can see, your portfolio isn't really designed to beat the market. It's designed to really follow the market or have a less volatile portfolio than the market based on your risk tolerance. So let's take a look at my example over here. I actually went ahead and invested $4,000 inside a robo-investor. This time I used Wealthsimple. So to start, I put my portfolio at the highest risk level. So if you don't know, Wealthsimple has a range of between 1 and 10 on how risky you want your portfolio to be, 10 being the highest. So that's what I chose for this experiment. And this was the portfolio that was given to me. As you can see, some foreign ETFs, some Canadian ETFs. About 7% of my funds are in bonds. So at face value, this seems to be okay. And the management fee seems to be okay as well. I mean, it's less than $2 a month. But the thing is, I only put in 4,000 Canadian into the system. And the $2 a month is on top of the fees that you already pay for the ETFs that they allocate for you. So for example, if you invested $40,000 into the Robo-Investor, the system will charge you $20 a month on top of what the ETFs already charge you for management fee. So if you have $40,000 invested, you're basically paying the Robo-Investor to rebalance your portfolio for 20 bucks. And to me, that's something that I can save by rebalancing my portfolio every single month by spending a couple minutes. Now, I'm not saying that robo-investing is terrible, but just look at the ETFs that they chose for me. It's kind of limited. Now, my portfolio is supposed to be very risky, so where are the higher risk ETFs? Like, where are some of the tech and healthcare ETFs? I don't see any of them in my portfolio. That being said, I can't really speak for the other robo-investors because I never really used them, but I would assume that the idea is basically the same. They charge you a small fee to rebalance your portfolio and they buy ETFs for you. Although one positive thing about robo-investing is that some of these robo-investors will help you buy fractional ETF shares, which is something that you can't really do if you invest on your own in Canada. So I guess that's kind of nice. Overall, if you have time to do your own investing, you should go ahead and invest on a platform like Wealthsimple Trade instead of going to a robo-investor. By doing investing yourself, you can actually create a portfolio that's more suited for you at a lower cost. I mean, yes, robo-investing is probably better than mutual funds, maybe because of the lower cost, but like, why pay somebody else or even a program to invest for you if you can do the exact same thing yourself? Anyways guys, thank you so much for watching this video. Do you use robo-investors? Let me know in the comments down below. That being said, now that I am back with more free time on my hands, I'm going to be uploading more videos in the coming weeks, so make sure you subscribe and turn on the notification bell for that. Take care, stay safe, it's Eric here, and I'm checking out.